following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome back to the show. Hope you had a good weekend. Weather's breaking around here. It's kind of nice in North Carolina. You guys are having a great Monday morning wherever you're at in the U.S. and the globe. We're going to hit Wells Fargo immediately. Talked about the nice, powerful trade around 47, 45, that neighborhood on the weekly. And sailing down about over 3 points, actually, since we had that kind of close below. Go back and retrace. When you have those type of scenarios, those are kind of market. Okay, we don't have the charts up right now. That's understandable. I was a little late this morning. But as you look at Wells Fargo and you look at the technical setup there, and we'll just ramble about Wells Fargo a little bit before we show the charts here. I've got plenty I can always talk about Wells Fargo about. When you have those close below, go back and retrace, those are really kind of market comes to you type scenarios. And you also, had that fundamental slant on things. But, it's really interesting. We talked about couple other shoes were probably going to drop on this. I mean, now some of the politicians are talking about breaking up the bank, and you know what? They can get carried away, and things like that can happen. And another weird thing is, I've talked about my sister who's been working there 26 years, something like that. She actually sold all her stock last week, getting completely out of it. A lot of other folks I've talked to kind of doing the same thing. So you may start seeing, just a little bit of a fear factor going on. Not that they don't seemingly hold about 30% of the United States mortgage contracts on houses and situations like that. I mean, that's, kind of always going to be there, I guess. But, some people could start switching gears here. And at the same time, God knows what's going to come down the pipe as far as, new regulations specific to this bank, possibly, and also, more fines. I mean, the $184 million fine was, as we've talked about, a rounding error for this particular company. And the clawbacks on some of the, folks that have already raked in some of the money, some of the managers who, they've, having people, I read something about, I guess there was a faction up in Minnesota that worked for Wells Fargo that, had a petition gathered together with a couple of thousand people on it that had basically said that the practices, this was, I guess, maybe a year or two ago, the practices they couldn't operate under anymore, got a bunch of employees sign it, and they just kind of sloughed it off. And then the person who started the petition, they found a way to get rid of them. The petition was about these unfair practices, and this was basically wrong all the way around for the customer and for the employee. And for Wells Fargo to kind of bury that and keep moving forward as a criminal enterprise, you got to wonder, what are they ultimately going to do to this thing as far as fines and changes? So a lot of apprehension when it comes to the stock price, more than likely coming up here, and there's a couple more shoes I think that are going to drop. And this has been, and there's that, 47, 45 neighborhood, along with this on the daily 47.11, where we reached up into, got into that DMZ that morning. That was a gift. And then it's just been sell the rally. And again, I don't think this is over. It's really shown itself too. The XLF, you talk about some of their fundamental problems, but also from a technical standpoint, we just showed the Wells Fargo charts. That's ugly. On a relative strength standpoint, the XLF bounced off this 1905 Friday. Did a little reversal too, which is kind of nice for the XLF in general, the banking sector or the financial sector ETF. And Wells Fargo, with the market going up, what did the Dow finish up the other day or Friday? 170, something like that. Wells Fargo finished down. So you got you got three things in your favor. You got technically a bad situation. You got a relative weakness bad situation, and you got a fundamental bad situation. So, you got a couple of things in your favor here. And a gentleman called in the other day, and we're talking about Deutsche Bank, and is it time to start buying puts on Deutsche Bank? And we talked about, maybe there's some better plays out there as far as devoting, some lottery tickets to at least. And I think Wells Fargo would be much more in that camp, because I don't think all the news is out, and Deutsche Bank actually bounced a little bit here. So, and there's some hope of, some people that are going to kind of step in and make sure this doesn't get any worse for Deutsche Bank. And again, you're back in the balanced area on the daily. You've got 1265 and 1366 as the main inflection points to pay attention to right now in Deutsche Bank. But Wells Fargo, there literally is. I'm going to go back to the weekly here. We closed below. This is the lowest close we've had since. Oh, well, that wasn't even a close. Jeez. December 2013. Okay, so let me state that again. This is the lowest close we've had in Wells Fargo since December 2013. You guys are hearing me, right? In the den? Okay. We're good? All right. So as the market, rallies recently and has been on a track up for the past, since 2013, December 2013, Wells Fargo is actually now making new weekly closes, weekly low closes. So not a lot in your favor here to get long this stock. I think some more people are going to be exiting, and obviously the bank's got a bunch of problems that are yet to be known, really, as far as things that could whack the performance of the stock in general. All right, going to the S&Ps. As we look at this, that's our Wells Fargo update for today. As we look at the S&Ps, here's the weekly. Got this kind of top of the mountain here, 2158.59. I personally didn't think we were going to rally like that Friday, but again, key reverse back up above 2050. That's the big number on the daily right now, and just kind of swimming around there. Just, I got stopped out of the trade. I was trying to sell the 2150s after the market kind of opened and got going on Friday, but that's what stops are for. And sometimes we can't do anything about that. It's just a part of the game. So shorter term numbers we're looking at right now, 2157.58, unfair highs on our 240s. And we're going to talk about this a little bit more when we come back. Stay tuned.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi guys, looking at a couple of stocks that you had the market violently go up on Friday, and we're about unchanged this morning. Looks like a little bit down. Looking for stocks downtrend resistance that just popped their head up relative to profiles on the long to intermediate term. Phillips 66 kind of pops up on the screen here. 8067. Let's go into East. Actually, let's look at the pre-market here. Is that a real print? I don't know if that's a real print. Let's go into and even though this, the daily, the weekly kind of takes precedence here, so stayed below that 8067. You guys know what crude's been doing. Let's just get off the S&Ps here and go to crude again. So here's crude. So up a little bit more this morning, and crude's coming into some unfair highs itself here on the weekly. This is 49.75 up here. So crude's made a pretty good move. Let's go to PSX, and again, not the weakest stock in this sector, but I love how this thing closed below the weekly unfair highs here. Crude kind of made a new move up. Phillips 66 sitting here. Can some of these oil stocks come down now? Can crude come down? Again, I haven't been a big fan of being long crude oil, but did get hurt because, it wasn't time to short, and there was no reason to short it by way of the profiles. But, a couple other stocks. Go into here really quick, get rid of this. A couple of the other stocks in the, let's just go to the XLE really quick. Another stock in the XLE while we're looking at the broad S&P NASDAQ downtrend resistance. Range Resources Corp, RRC. Let's take a look at this one. Obviously not been participating lately, and just kind of empathetically rally back up into that inflection point 39.06. So oil starts coming off at all. You've got some situations that have presented themselves on the oil sector. Let's just go back to the XLE here really quick. A sector that's been on fire relative to breath here. Let's see, a couple other stocks. Let's just look at Occidental Petroleum, OXY. Pretty violent move with crude lately, but again, you know, this is another one kind of coming up into, had a close of slightly above this inflection point, 72.75, but again, you know, in the kind of noise neighborhood there. And if if oil can come back just a little bit, a lot of these stocks have, you know, reached some major inflection points. Markets kind of come to you. I mean, that Occidental Petroleum was a nice little chart there on the weekly. You know, had broken down, come back. Nice resistance area right there, as you can see. And the most important thing that I see as a feature of this whole thing we're talking about is it gives you a chance to play defense, put the stops in, do a little decent risk-reward scenario. So it might be a nice trading opportunity. And that's the way I'm looking at it. So here's another one. Let's see, where's the, let's look at EQT Corp. I had a big day Friday. Yeah, I think you got better things to I mean, it's not a bad play on an intermediate. Let's take a look at Baker Hughes, BHI. No, this is definitely one not to be shortened. Let's take a look at Schlumberger. All right, so definitely reverse back into the fair auction. We had talked about, you know, this a couple of weeks ago, kind of getting down into that area. The unfair lows on the weekly really showed some weakness. I mean, last week I think this thing just finally said, you know what, I gotta go with the flow here. Oil's rallying. Here's the daily though. I think you got better shorts out there than this one, but you do have something. If we can get back down below there, we could revisit 78.61 down into 77.36. Kind of a short-term noise trade. Halliburton, let's take a look at that one. Blew a gasket and got back in the fair auction. Kind of nothing really to lean on there. A couple other ones here in the oil sector. COG. Blow this up a little bit here. I think that's a no trade. Let's look at Southwestern Energy. Kind of dipped a little lower than where I wanted to see it at, but poked its head back up above that 1356 area. All right, so let's go back into the dashboard here, but let's get into E-signal more importantly. Let's take a look at JP Morgan. All right, so, you know, we had the violent bounce off of 65.14. Teflon coated. Closed last week at 66.59, so, $1.50 bounce in a couple of days on JP Morgan. And can this stock head higher? You know, obviously it can. One of the stronger stocks in the XLF. Let's take a look at Goldman Sachs really quick. A little bit of a key reversal back above that weekly unfair low, 160.49. So here's the chart on Goldman Sachs. Let's see where we're at this morning. That's a real print. It looks like at 161.70. So trading a little bit higher. Support's going to be at 160.49 on GS. Let's take a look at Morgan Stanley. Here was the action on Friday. So getting up into that Daily on fair high 32.26, and the strong of the XLF for sure. Sorry, guys. Let me get this out of the way. A couple other stocks. We forgot to look at ExxonMobil. I had that on my list today. Here's the daily. Kind of breaking stride for the first time since the upper 90s. Getting past 85.22. Never really came back and retested that area. But definitely not in the short camp right now. We'll be right back, guys.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
If you're looking to discover a new financial resource and diversify your financial portfolio, consider the new Market Safe Focused Commodity CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 6 equally weighted commodities, including gold, silver, copper, nickel, soybeans, and sugar, in one powerful CD. With annual pricing caps of 50% per component, you could earn up to a 50% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on this index CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The October 13th funding deadline will be here before you know it. So hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, guys. Welcome back to the show. Waiting for your signal to reboot here. We're going to take a look at a couple of currencies while we're waiting for this. And looking at the British pound, you guys been looking at the news, you know that a little bit bearish fundamental news out there. Kind of having 2 closes below here. Remember, what we always try to do is to block out one side of the marketplace. And for a while there, I was, relatively bullish on the British pound. We actually reached some lofty highs of above 134. But when we came back down here, I tried a couple of bounces here. Getting these weekly closes below kind of, you can't really go long until you start getting closes back above those inflection points. And, this thing's starting to sail south here. So it's been nice to avoid problems not being long right now. But I hadn't been a huge fan of being short, so it's kind of been a no trade for me. But, having those weekly closes below, I let my intuition take advantage of my mind. But 130.19 had those 2 weekly closes below. If you've been using that as a moniker to get short, that's great. Kudos. Here's the Japanese yen, just, caught a bid off this 133.34 area. There it is. But again, I've kind of not been really playing around with the bounces on this one. So missed the British pound short and missed the longs on the Japanese yen USD cross. So again, I'm waiting for a flush on this one. Hadn't happened. Sometimes no position is a position in itself. So here's the Aussie dollar. We've talked about this 76.89 up top. And again, Friday talked about catching a bid here. 75.87 kind of market comes to you. Met some targets. Market comes to you. Blocking out the short side. Again, this is one, I think we hit it to the tick almost. So 75.90, the Umferheiser 75.87. All right. That Aussie dollar trade's been a nice little go-to situation for a while for me. The euro reversed a little bit here again off this 111.43. Those were the initial targets down below, and bounced right off of those weekly numbers. 111.43, that POC, that's kind of been the cross and retest, cross above, kind of retesting. Hate it when the euro goes up. Just hate it. All right. That's actually a very true statement. Somebody in the den said is saying short the British pound until it does not work. That's a lot of things. I'm not meaning to pick on the British pound, but that's a very true statement. A lot of times you have to keep turning the wrench the same way until you're told differently technically. And a lot of times you might go, well, I can't go to the well too many times. Well, there's something to be said for that. But, a lot of times we talk about, especially in the commodity kind of currency world, futures world, these things don't have to make sense. I mean, things on their lows go lower sometimes, and things on their highs go higher. And it is what it is. And, we've talked about, the Jimmy Rogers and the Rick Santellis of the world trying to make too much sense out of where something should be. The market's determined where it should be. And I think I respect both of those guys, and but they've been kind of wrong on rates for kind of a long time. And I'm actually with them on all their arguments, but sometimes markets do some nonsensical things, and trying to make too much sense out of something can hurt sometimes. Procter and Gamble, we've talked about this being there's I hate to say no way to lose trade, but this has been something in the relative strength world, and a couple other things that we've talked about, safety play, blah blah blah, everything else combined. Now has had a weekly close above 88.87, and we've talked about this, trying to buy support and buy breakouts on this stock. We haven't kind of gone back to it in a while, but again, there's kind of the support recently, 86.56 last week, and then we just kind of blew a gasket up top, and now we've got a weekly close above this 88.87, and now you've got to be looking at 88.87 as support. All right, so kind of just like it was there, a really no-lose situation. Tom's going to kill me for saying that. No-lose. You can't lose. But it's been a nice trade. All right, here we go. Let's take a look at Microsoft. All right, so you guys know about the LinkedIn thing. 57.56 looks like a real print this morning. So kind of around where we closed on Friday. I'm fully expecting this to kind of do a Procter & Gamble and start moving back above 58.50. Not interested in shorting this thing whatsoever. Let's take a look at IBM. Let me check something here. Do you guys know if that's a real print there? Not sure, but that's wild. 164.95. Can somebody? Was that a real print on Friday up there? Don't know. Anyway, that's interesting. Got right up to that inflection point, 164.95. Reached a high of 165, and then backed off 6 points. I'm going to check on that on the break. That can't be real. Let's see here. Okay, let's take a look at another oil stock I forgot to mention earlier. Chevron. Couple emails about this one. So what would I do here? I really just kind of think it's a no trade. I don't think you've got a lot of leverage here either way, and I think you've got a lot better things to spend time, energy, and mental capital on than Chevron. So I mean, it's nice that it got back above 100. I guess you could call that a victory, and kind of look at 100, 153 as support on it right now. But I think oil's going to just not continue to go north, and you got to keep that in mind. Let's take a look at another bank stock. Bank of America, another homeboy company, Charlotte, North Carolina. Nice reversal, just like the XLF here, 1538, support now in BAC. We'll be right back, guys.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped, and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi guys, welcome to the Johnny Bench is, man, my hero is on CNBC right now. Man, the big red machine. Still got every baseball card from that. The big red machine, 74, 75. Anyway, let's take a look at Google. This is what we're up against here now. 789, 75 kind of came off of there. Been a strong stock without question. Looks like it's printing 777 this morning. So kind of, I don't see a lot of massive leverage to trade this stock right now. So we're going to stay away from it. HPQ. All right. So, kind of took off and I guess we had a weekly, what is that weekly close there? 1453 unfair highs, or 1451. So I wouldn't call that really kind of closing above the noise area, but the following week, 2 weeks ago, it came back and reset. Just haven't looked back. But the good news is on something like this, and there was the more important trade down here at 1379. You're going, Logan, thanks for alerting me now. But as these profiles edge higher, and it's a stock that's showing relative strength in a market that, it's been kind of trading sideways lately, but always prepared to go farther north. HPQ coming down and getting into that support area, 1379, and just, that was kind of the free trade up into 1451. Then you got, relative strength taking over. Anytime the market rallies, it starts moving north again. So what do you do with HPQ now? You still don't short it. Literally. Like, this is telling you there ain't a lot of reasons to get short this thing. So that's blocking that side out. Here's the 240s on HPQ. So, why am I bringing it up, and what do we do with it? Right now, literally, you got short-term support at 1520 on this stock, or shorter-term support, and that's a buy area, believe it or not. Here we go. A couple of stocks I want to mention. PepsiCo, had some obviously news last week. Here we go. So, again, this one getting into that 109.98. I think we reached a high of 109.71, backed off a little bit here. What do you do with PepsiCo? Relatively strong stock. And don't really see a lot of leverage here. I think we're probably going to be range bound a little bit on this one. Any weekly closes above 109.98, I'd get interested again, but you've also got support at 105.16 on PepsiCo. Let's take a look at UTX. All right, so this is one, again, we get the weekly closes below, kind of retest, and weekly close again, retest. This is one that's, I like blacking out the long side on this one. So if you're looking at stocks to be long, we've showed some long opportunities. This is one I'd actually be looking to look at from the short side. So you've got some resistance at 101.88 and some more at 103.52 on UTX, and I wouldn't be looking at going long this stock. All right, let's take a look at Home Depot. Talked about this one a couple of times. Close below, kind of looking for areas to short it again. And I really like this stock from the short side because it's kind of proved itself twice around that 129.55. So there was the first one a week or so ago. We talked about it empathetically kind of rallying. This was on this, if you remember, it was on the downtrend resistance sort in the scanner. Couple more we talked about today, but then had the sell-off. We kind of had the key reversal off of that on Thursday. So I like this from a relative weakness standpoint, and I love it revisiting bare minimum 126.46, stops above 129.55 based on your appetite for risk on Home Depot. That sounded professional, huh? The stuttering's gone. Is Jay with us today? No. All right, American Express. All right, talked about, this kind of coming down in support, 162.90. The weaker stock out of the XLF. I mean, we get a break below 62.90. It's going to be nice to see this thing from the short side. But right now, showed some decent defending of this area. The XLF kind of did a little bit of a bounce off its support. The whole sector, Wells Fargo, God knows what kind of new regulations coming down for the banks. You're looking to short something, you got Wells Fargo on your face. You're looking to buy something, you've got the Bank of America's and the JP Morgan's sitting there. So watch out for doing these mean reversion pairs trades. They will crush you sometimes. All right, let's take a look at a couple other stocks I wanted to hit here. DuPont. All right, so reason I'm looking at this one is, again, this has kind of been something just kind of trending up, finding support again here, 66.37. Might be a little chance to look at this as support, but I'm actually, and I'm not exactly impressed with the way this thing's kind of continued to kind of go back down into this 66.37. I'd be much more inclined, believe it or not, to trade. And we've got a print this morning, 67.90. We're up a little bit this morning, right up in here. But, I think that what we're looking at is a chance to actually sell this around this daily unfair high, 67.78, 67.90 is where we're at right now, right in there. And trade this back down into those lower numbers, weekly unfair lows, and even lower. So I think you're getting a little bit of a gift this morning on DuPont, is my opinion. Gilead, let's take a look at that one. So here we are. Something's still wrong here. Kind of got that broke stride a little bit here, but finally found a profile, got back down below. You got shorts now. I think you can leverage at 80.15, playing defense above. Is that a real print? No. Some weird action on the close there. But like this still from the short side. Let's take a look at Aflac, AFL. Okay, here's the weekly. I don't think you can do too much wrong looking at this stock from the long side with stops below 70.63. I had an email about this one, and that's the way I'm looking at Aflac. We're going to go to our last break here, and we'll be right back, guys.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge Heard Daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartleys, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi guys, welcome back to the show. Taking a look at gold. I'm going to hit gold and silver really quick. I'm kind of a fan of being long gold, but also a fan of picking the battles correctly and not letting things getting carried away, especially on the downside here. 1333.31. We kind of crossed those borders and then kind of rallied back and hit them on Friday. Actually hit a high of 1331. 1331, 1333, big numbers here. And then, hasn't really given me a reason to get long again. So we talked about 1309, 1310 down here, getting back above 1331.33. That hasn't happened. Neither one of those has happened. And that POC on the weekly, that's that, again, coupled with that unfair high on the daily, you got to get back across that border or just come down and let the market come to you on these inflection points below 1309. Down below 1310, and then you got the big number, Big Mama at 1296, and we're starting to get hit a little bit here pre-market. Trading 1316 right now. So thank goodness for the profiles keeping me out of trouble there. Not in the market. Watching other people. Here we go. Silver. Acting quite a bit better than gold. I mean, here's the the love silver above 1860.61, the long-term trade. Here's the recent support on the dailies, kind of regulating this thing up again, 1885.86. Still the case. That's support. Beans in the teens. Not. So kind of reversed and talked about this action, that reversal back above 1944.45, and then, as you can see, used it as support. I don't know if you can see this. Let me blow it up a little bit here. And talked about, we have to either get down below there or we have to get back up into 64 to hit it again. So I talked about a trade and bounce off of this key reversal. That's been nice, but I'm not exactly excited or impressed, with the way it doesn't want to get away from this area. So to me, this looks like a little bit of a continuation pattern, just kind of hovering and compressing down into these daily unfair lows for another move down in soybeans. We're going to hit copper really quick. And, talked about first targets, 221.32. That was hit, that POC on the weekly. But it's been nice to see this thing kind of get up and stay above this 217.95. So you've got support 217.95 in the short run, and then breakouts above 221 to head to 226 and a little bit higher on copper. Dollar, don't have to even go there. This is long support, big time, 94.91, still the case. Shanghai's starting to creep back up, by the way. Kind of let me down last week, getting below these 30.45 areas, but I'm looking to kind of start playing around with some ETFs back above that area. China A-shares ETFs for you guys. The utilities, we got to look at this one. This is a pretty big and bad situation last week, that reversal, but now you've got a profile that's lower for the first time in a long time, and you've got a bounce support opportunity, 48.77 on the XLU, even though with that key reversal. Stay tuned for Larry, guys. You'll thoroughly enjoy it. We'll be back again tomorrow.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.